Good morning, everyone, and welcome to the European crossover webinar. We just had some Italian data just hit the wires here on Italian industrial output. Came in down at 1.2 tenths. There's some further data due out, but that's not going to be until 7 a.m. Eastern here. And you can see that, though, consumer sentiment surveys. And then, of course, as we move into the States, we will have jobless claims as well as PPI, which will be out at 8:30 Eastern. Accompanied with that will be Canadian employment, which will be a mover here for the Canadian currency, certainly. And then we do have a preliminary University of Michigan survey at 10 a.m. Eastern, which certainly should have an impact, big impact. They're expecting to fall down here to 75 as the Reuters poll. So pretty big fallback from, when we've been into the mid to upper 90s. We have seen the euro come back a bit after struggling over the last couple of days, or that we had moved higher, but kind of backed off a bit. Canadian currency still holding a dollar CAD above the 140 after its dropped back over the course of the last few days since the beginning of the week. And if you look here at dollar yen, still below the key pivot, which is at 927. We are seeing equities move to higher highs at this point. We can go in and take a quick look there. Also, tomorrow's Good Friday, so on a programming note, there will not be a webinar tomorrow on Good Friday. So just so you're aware of that. So you can see here that we are moving to new highs here in equities. Look at this. Boy, what a move. As I guess some of the coronavirus, the fatalities have not been as much as some had expected or anticipated. That's has brought some further buying. And although when you look here at the NASDAQ, interesting that the NASDAQ hasn't gone to new highs. Look here, yet see right there. But the S&Ps has moved to new highs. Interesting here. We're up at that. We had mentioned this yesterday when we talked about the 88.28 it was, and then we mentioned talked about 82.62, and there's that 82.62 on its 2-hour close. We have not gone beyond that, although in the S&Ps we have gone and moved higher. Here we are with crude oil, and crude oil certainly moved higher. Continues to go and improve. Very good levels. Actually, pretty good run up right in here after that dip. So at 26.5. And gold's above $1,700. So let's go on and move into the currencies. We'll just take a look at the news and then move on to the analysis. So the Australian New Zealand dollars up sharply for the week. Market absorbs bond flood. The Australian New Zealand dollars were holding hefty gains for the week on Thursday as markets wagered a peak for the COVID-19 pandemic could be on the horizon, even as the death toll mounted across the globe. The chance, no matter how slim the economic lockdowns might start to loosen, so was enough to lift equities and commodity prices and boost growth leveraged currencies. That left the Aussie at 62.23, having climbed 3.8% for the week so far and well away from the last month's 17-year trough at 55.10. The Kiwi has also added nearly 2.4% for the week. The Aussie quickly shrugged off S&P's global decision to downgrade Australia's outlook to negative, given it would be a year at least before the AAA rating might be cut. The move had little impact on the demand for debt. The Australian government sold 3 billion Aussie dollars on notes on Thursday alone, and the actions all drew solid bids, as have all in large bond sales this week. 3-year yields were a shade higher for the week. Yields on 10-year paper rose a sharp 20 basis points for the week to 0.97 tenths, partly with a move in 97 basis points, I should say, with a move in U.S. Treasuries, partly because the RBA had signaled it might slow bond purchases once markets had stabilized. New Zealand is almost planning to borrow a lot more with bond issuance. Kimberly Mundy, an economist at CBA, estimates the government will have to raise 90 billion Kiwi dollars by 2024, which would more than double the debt to 40% of the GDP. The central bank is helping keep the market liquid by offering to buy 1.8 New Zealand billion dollars worth of bonds. We expect the outlook on New Zealand's sovereign credit rating will be downgraded during the current recession, she said, but added such a change will likely have only a fleeting impact on the Kiwi as much as it did on the Aussie. In the long run, both currencies were driven by global economic growth and trends in the U.S. currency, and there the outlook was none too bright. As a result, we expect the Kiwi weakness in coming months, irrespective of changes to the credit rating and or outlook on the rating. Moving on, commodity currencies held firm on hopes of pandemic peak and oil output cut. Hopes of the peak support. Commodity currencies drew support on Thursday after the hopeful signs of the coronavirus pandemic may be peaking and the major oil producers may agree to cut output to stem a plunge in oil prices. The Aussie dollar fetched down slightly, but still near its highest levels since mid-March, maintaining most of its gains since rallying from a 17-year trough. The dollar's index against 6 major currencies stood flat at par 15. The index down 0.6 so far the week as the safe haven flows to the U.S. currency eased on rising hopes. Much of Europe and the United States could soon find themselves at the worst of the period of the COVID pandemic. New York reported its biggest death toll while infections hit the highest level in 4 days in Spain and 3 days in Italy, said Terura Sasaki, head of Japan's market research at J.P. Morgan. All these are negatives, but forecasts both from government and experts that the peak could come within days are leading markets not to focus on those details. New York State on Wednesday reported the most coronavirus cases in the world, overtaking Spain. The market is now focused on the U.S. initial jobless claims. The average forecast of economists stood at 5.25 million after a total of nearly 10 million claims over the past 2 weeks. Market already known that the economy is being hit by extraordinary shocks, said J.P. Morgan Sasaki. Even if the number increases, it will probably surprise few people, while a better reading could enhance the perception the market worse may be over and trigger a bigger market reaction. On top of the hopes of a peak in the pandemic, commodity-linked currencies, including the Aussie, got an additional boost from hopes that major oil-producing countries could agree to cut output at a video conference. The Canadian dollar traded at 40.25 per dollar. The Norwegian krone also strengthened slightly, trading at 11.12. Media reports suggest Russia could ask its output, and Algeria's energy minister said he expected a fruitful meeting, though there remain tensions between the world's top 3 producers, the United States, Saudi Arabia, and Russia. Markets are now looking to the meeting of OPEC, plus some people are having high expectations, but getting a deal could be tricky, said Kayosuke Suzuki. The euro is flat at 8.58, having slipped three tenths on Wednesday after European Union finance ministers failed in an all-night talks to agree on more economic support for the coronavirus-stricken economies. Two main sticking points were conditions for access to emergency credit lines in the Eurozone's bailout fund and the notion of issuing joint debt by the box, so-called Corona bonds. The yen was a little moved at 8.94, having traded in a narrow range this week. While the dollar yen is supported by the overall risk-on move, there's selling from Japanese exporters above 109, which will likely limit the chance of a big break above that level, said Yukui Ishizuki with Daiwa. So with that, we will move on to the analysis. So looking here at the euro, the euro took a minor step back on Wednesday among a dearth of data. Support for Thursday will be 8.18 with resistance at 9.08. And you can see, boy, we traded in a very tight range. I mean, very, very tight range ahead of Good Friday. And once again, just to remind, is that there will not be a webinar on Good Friday. So things are kind of tightening up here already. And of course, the buy still remains bearish. With that, we're going to move on into the cable. So cable added on to Wednesday's gains, challenging 24 even. Resistance will be 24.52 with support at 23.17. So coming across that close, you see that right here? That's where we're coming up with the 24.52, which will be the closing on that day. And certainly the bias remains bullish. With support at 23.17. And moving on to the Aussie dollar. The Aussie furthered gains for a third day. Resistance will be the weekly level of 63.03, although we're in a very tight range though now. But this would be the key if we could come up here. I don't think it'll make it up there. It's already had a decent little run so far, as the story mentioned. But this would be the key level if we can break even further, which would be 63.03. There is some resistance right here. You can see right here the opening close right there. But once again, if they get a little bit of a going into the weekend, and things are starting to quiet down a bit, as far as not really quiet down, but certainly we've seen the outlook that diminish a bit. They were expecting a really bad week as far as deaths, and certainly we've had quite a bit of fatalities, but it's less than what people are seeing. They think, once again, as the story says, that worse may be over. So we can see further move here. So once again, that would be 63.03. And I had support all the way down to here 61.10, but I think we can do a little bit better than that. We're going to go right here with you see right here coming across right there, just the body touch under there. It's going to be 61.51. The Kiwi is similar, as we mentioned earlier in the week, similar setup. Even when it broke down, it was the same similar setup as the Aussie. Once again, very, very tight range here with Kiwi. Kiwi finished Wednesday's session with a mild gain. Resistance will be 60.42 with support at 59.40. Let's go move into the CAD. So the dollar CAD closed above 140 with crude under pressure. Resistance will be 40.75 with support at 39.27. But now we've seen crude start to strengthen a bit here, so in anticipation of that meeting, so we shall see. But the resistance will be 40.75. And support at 39.27. With crude strengthening, they'll be surprised if we go on and get this slide under here at 140. Hence, we've got that support at 39.27. So the dollar peso continued its decline from Monday, with Wednesday's low above Tuesday's respective low, although we're now broken even lower. Resistance will be 24.21 with support at 23.70. Well, we're already come to 23.80. We've got support at 23.70. And you can see where that's coming in right across here. So that's going to be support 23.70. With support resistance at 24.21. Look at the dollar yen. As tight as yesterday's was, look at today. Oh my God, we're barely even moving. Look at that. There's almost no movement there. And can you imagine after these wild runs, and now it's just literally gone dead in the water. The dollar yen held steady in a tight range on Wednesday. Well, if Wednesday was tight, this one is just like unbelievable on the straitjacket. Resistance remains the pivot of 927, although we're challenging right here at 896. With support at 809. Well, we can't even get past 896, but the key level would remain the pivot of 927. And they'd have a tough time going beyond that. Matter of fact, you even mentioned it in the story. You have a tough time getting beyond the 9 handle. And support we mentioned for 809 we can probably tighten that up because that'd be all the way down here, and we're trading a very tight range, so we can pick that up to about, well, there's the 809 right there, so it's not that far off. We can go and take a look at a 2 hour, see if we can see something a little bit closer. You probably clean this up a little bit too. Coming across right here. 862 for now. 862. Considering how tight we are. So the dollar index closed above par after running into resistance at par 50. Remember, that was our resistance yesterday, par 50, and the high was par 44. Okay. Support remains 99.35 in case we break lower, but we're trading in a very, very tight range so far. So I don't expect it to move very much, but we'll keep the par 50 and we'll keep the lower end of 99.35, which is exactly what we had from yesterday. You see that? With that, we'll move into the cross rates. So looking here at the Kiwi yen, we've continued to advance. We've even taken out this level right here. At least interim-wise we have. You can see right there. There. We actually closed above it just slightly yesterday, and we've in a very, very tight range. We're just slightly above that right now. Resistance would be this high right there. So this going to be 65.91. Support's going to be right here. You see coming right across the close, the open right here, just before that low. So support for today is going to be 64.76 in a very, very tight range that we've moved into. Let's go and move into the euro yen. Still in a very, very quiet day. Look at that. You can see this coming right across this low and this low. That's going to be resistance, which is going to be 1879. Still remains bearish. And support, that's going to be coming right across here, and it's basically going to come You can see right there, this low coming across this closing here, and which is just below yesterday's lows, which is going to be 1783. Still relatively close. Moving on to the euro on. Well, this has continued to drip lower. Look at that. Just continue to push and push and push a little bit lower here. Let's go on and move into a 2 hour to see if we can get something a little bit closer. Yeah, and you can see right there, this is right in the middle of this volume here. You see coming all the way across here. So that is good support there, which is going to be right there on those lows here. We'll call it 1740. A lot of volume right there. Right here, you see right there when we finally broke higher, started a nudge up here, we'll call it 1736. Well, I should call it 70 when you say 76.36, which we had from yesterday anyways. And then on the upside, very, very tight range. God. Right there, 74. Move this back. Should have a 3 handle on that. That's what I was looking at. Apologize. 73.68. And that's going to be resistance right there. 75.67. Let's go move into the Euro Kiwi. Same thing here, another tight session. Boy, things have really tightened up quite a bit. Support's going to be right there. Right there, 80 cents even. We're actually holding up beyond there, so we're going to just call it 80.31. Resistance coming right across here. It's going to be 81.53, but another 60 pips higher. Aussie yen continue to move a little bit higher here. Move in. And resistance, we continue to move higher in here. Well, this is going to be the key right there. You see this? Pull this up. Right there. If we push higher here, it's going to be 68.32. Trading in a fairly tight range, but we've got that upside bias. So if we were to dip back, this is where you're going to find support here. You can see this coming across this high, and that coincides right here with this same level. You see that? That is going to be 67.18 for support. We know how well the Aussie and the Kiwi are doing. So we could continue to see a little bit of a bid coming in here towards the close. This is on the Aussie yen. We actually come off just a little bit here, but certainly had good, strong 3 days. Let's go and move into the guppy. This is traded in a very, very tight range. You know, it just seems it's going to be quiet. What we're going to do is we're going to go with the resistance off of this last strong close, which is going to be 35.28. If we do get a bit of a dip back, it's going to come right there. Right there is where they would come to, which is going to be 33.91. And lastly, let's go to sterling on. They have seen this boost come off. They've come off 20 handles. Remember, we talked about how although the S&P has gone to new highs, the NASDAQ had not gone to new highs. So certainly waiting a little bit since we came on in and we had just come up to these highs of 27, nearly 27.70, and now we're at 27.49. We paired back, but we're going back towards VWAP. Certainly the odd has continued to strengthen here. So looking at resistance, that would come in really these touches coming across. You see here, coincides here. That would be then 99.65. Then support. $97.90. $97.90. Although you can see right now, things are relatively quiet in FX land. We'll go in and take a quick look over back to the SPOOs. You can see now on a 1 minute chart, look how much they've come off. We were here on a 2 hour chart. Look how this thing was way up at the top. And we talked about how we had broken to new highs. You see here, all the prior resistance. But when you looked at the NASDAQ had not broken to new highs. You see here, we broke to new highs here. We saw that divergence. And certainly it had its own impact here on the SPOOs here. They ran out of gas just around 27.69, and we've been paring back, although we are coming right now into VWAP. And a little bit further demand down here at 27, I'd say 43 right there. See a little bit of a bounce back. Here's a NAS. That's also approaching down here into VWAP. The SPOOs have already gone into VWAP, but the NAS. And then lastly, we're going to take a look here with crude oil again. And you can see here, we actually made it up to 26.64. We've dipped back down. We do have that video meeting with OPEC. So, and we've seen gold start to move back up again here after that dip back. We had that big run up here above 1740. We came off quite a bit, and then we kind of just consolidated in here. You can see a little bit of a hammer, a move off of that, come back in here, holding this area here, and then we've moved on up to challenge $1,700 when we came on there. But that's what we have today. Looking back once again on the data, we'll recap that. As we come into the States, we are going to have weekly jobless claims and PPI, final demand, as well as Canadian employment. That'll be key. And we do have University of Michigan initial read, preliminary read here. Once again, we will not have a webinar tomorrow. It's a Good Friday. We've already seen things really tighten up or really, we're not seeing very much movement right now. And in FX, for the most part, things are kind of winding down. We've seen, I suppose, at 27.42 now. We're winding down ahead of Good Friday, so we will not have a webinar tomorrow. With that, good luck to everyone. We'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.